Thanks so much. So before we jump into the panel, I think I'll take some quick feedback from the audience here. How many of you have used any UPI app in this room? Yeah, looks like a significant number. So again, one interesting thing to note is, the three biggest UPI apps which work today by number of customers are all by players who are not banks. And when it started, obviously, UPI was thought to be a bank-led model, but that's not how it has turned out to be. A few more questions, and then we'll jump straight into the panel. How many of you use Google and Facebook and Amazon? Again, a show of hands, please. Again, a large number of people in this room use all of this. The point I want to make is, all these players are also getting to some sort of financial services and using technology in a way that until a few years back, we wouldn't have thought. The third example I would like to take is something which probably all of you here will relate with, but is true for the larger India, the Bharat that we may call it. I'm sure most of you would have an Aadhaar ID. So just like all of us in the room, the rest of the country also, now we have about 1.2 billion Aadhaar IDs in the country. And a lot of it is being used now for authentication, for doing transactions as a digital identity. So what it really means is, until now, financial services was limited to insurers and banks and basically the traditional players. But what's changing very fast and what we will see in the future is a new breed of companies which will evolve, which will emerge, which could probably disrupt the way financial services is run in India. And what we will also see is banks trying to be playing this game a little differently. And probably it's a moment where it could be a dodo moment for the banks where some of them will go extinct if they don't adopt too fast. Or they could take this up as an opportunity and do something about it. With that, I'll jump to the panel and maybe Ashosh, I'll start with you. Your firm meets a lot of new companies and sees a lot of new technologies and ideas. What are some of the things that, that as a firm you find exciting and you see a great future in?
Yep, thanks. So, one thing, what we typically see at the early stages, there's a lot of optimism with the new infrastructure which is getting rolled out. People come back and say, thanks to India Stack, thanks to technology advances, capability of cheaper computing, look at it this way. That's one thing which comes out very significantly is thanks to cheaper computing, we can build out better prediction algorithms which will create better predictions in terms of lending profiles, credit rating, blah, 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 all of these things. This optimism on the tech is significantly high. Where we see a little bit of a concern which comes up is, as soon as you hit the markets, there's a scaling up issue which comes around there. And that has been a little bit of a sort of a dampener as soon as we come to it. And where our thesis goes around there is, unfortunately, growing this market is beyond the tech part is also a marketing challenge. And how do you sort of figure out ways of doing it more efficiently? Other thing which we see from a startup side, and we also relating to a personal experience around 2 years back when I was doing my board meeting at my previous place. We did the competition deck and we rolled out and I took the banks out of the slide and said, I'm not going to worry about it right now. And I was part of a wallet company, and now if we come back, we'll think about it differently. But interestingly, now when I look at decks and I find startups not mentioning banks, we again get a little worried around there because things have changed significantly. And what has happened is all of this tech is available in some form or another with everyone. And that is making a significant difference. Case in point, like what we were speaking a little earlier about blockchain, most of the innovation which we'll see in blockchain will happen at enterprises which have maximum number of use cases to build out something significant and powerful. Unfortunately, most of the startups which come to us today come up with a point solution which doesn't cut much ice. That's pretty much what we have seen recently around there. So at the stage which we operate, unfortunately, we do not share that kind of optimism which is being seen around at this point of time.
Interesting. Maybe next I'll request Sachin and Krishnan to share your perspectives one after the other. You guys are obviously playing in the biggest revenue pool in financial services, which is lending. And I think that has seen a lot of action of late, many people trying to participate in this revenue pool, probably grow this revenue pool by going after customers who until now didn't have access to formal credit. So what trends do you see in lending? And specifically, if you believe any technologies are going to push the envelope and make this accessible to more and more customers.
So I'll start, and maybe Krishnan, you can add. So, one of the things that most banks look for in technology is how do you provide access to customers who I couldn't go otherwise to? And how do you lower both my financing cost and the OpEx? And these are some of the two things which plague the industry, and it's not limited to credit. It's existing in other forms of products that they're trying to sell to, as well. And especially when you go beyond the people who are credit worthy, and this is the so-called Bharat, or even within the urban pool, there are people who don't have access to credit. The challenges become even more that how do you really figure out the financing cost of the, what's going to be the NPA, how do you assess credit? So technology has been a strong enabler in these segments. And to be honest, these technologies are not IoT or ML or blockchain. It is as simple as the biometrics verification of identity. That has solved significant issues of KYC requirements, of figuring out whether this person is true and legitimate, because that reduces frauds. Similarly, there are other areas that technology plays a role. We currently are able to do a loan approval in less than 5 minutes at the point of sale, which is in a store. And that couldn't have been possible otherwise without technology. So I see technology as a huge enabler. Blockchains and ML and IoT have their own place, and through time, all of these things will get adopted. But credit has a huge role, technology has a huge role to play in credit for sure.
So first thing, I think I'd completely concur. Let me start by saying I'm just super excited by the level of, I know it's very cliched, India stack, smartphone, broadband. While cliched, it is still very, very early stage of evolution in India. If I were to talk about the journey of digitization, that is something we have seen, right? When we started Kisht about 1.5, 2 years back, there was a notion of the degree of digitization in India that has happened. I think when we rolled out, went live, it is still a work in progress. And when I say work in progress, if I scratch the surface and go to tier 2 India, I think there's a big difference between what we believe in sitting in Mumbai or Delhi versus what is the reality. So first thing I want to say is very excited about the basic infrastructure that the country is putting up. I would agree with him on the second point. It is today not about IoT, ML, or blockchain. I do believe there is a lot of value in that. But today it is about how do you leverage this technology to fundamentally do two things, right? One is bring down operating cost. And that becomes, anyone who understands lending would agree with me. I don't care about OpEx if I want to do a home loan. If I want to give a loan for 20,000 rupees, I care about OpEx, right? And that is one fundamental shift that has happened. Can I give a loan to someone I have not even seen instantly on the spot and never worry about it, right? And I think that part of the journey, at least for a set of customers, has happened. I think the second part of it is the degree of big data which is available, right? Big is not the right word, but a limited set of data which I can find out about a customer who doesn't have banking history. And that, to us, we are getting more and more of that information through typically the digital footprint, sometimes through social media, sometimes through the merchant, some partners who have enough of a history of the customer, and being able to process. And therefore, a lot of these cloud-based services that we are able to use and process that data is also a second big enabler for us. I think what the second one does is brings down the financing cost. And the way we see financing cost is not to say, do I know whether he can repay? It is to say, I know this customer, even though I've not met him, I know who he is. I know he's genuine, right? And that effort that has gone in using this technology is the other big thing I'm super excited about. Do I see a challenge? I think the challenge is what you mentioned, how scalable it is. I think it's a little bit of a question mark. Scalable because banks are trying to do the same thing we are. And at some point, either we partner with them or we work independent of them. If you work independent of them, at some scale, they become your competitors. And I think that is, taking this to the right scale is something that we need to work towards.
So some interesting thoughts. I think some views which have come so far is, yeah, technology is important, but probably some simpler things are going to make a big impact in the near future. Maybe something like an India stack, which at least we also as a payments bank believe is going to be extremely powerful. And especially with the telco strength, give us ability to access the 400 million customers that we will have as a part of the merged telco. Let me come to Prasanna. And maybe I'm asking a little provocative question to you, Prasanna. Until now, I think the banks have had the luxury of reach. So although our banking reach in the country is abysmal, even in spite of that, a large part of distribution, say of insurance and mutual funds, are all controlled by banks. And because they control it, they are able to, if I may use the word, arm twist the manufacturers in some sense and keep a larger part of the profit pools. How do you see technology impacting someone like you? And specifically, if you are doing any things in blockchain which you think is relevant. The second part of my question to you is, while for some players in this room, especially players who are starting up new, maybe ML and AI may not be that critical. For someone like you who has large amounts of data from the past, how do you think about it?
So, very big question. So I'll try to answer in 3-4 folds. So see, banks are trusted agencies or trusted institutes governed by RBI, governed by government. That is why they are there. If banks would have not been there, somebody else would be there, but it would be always governed by governments. That is why they were leveraging up all these banking services to the customers. So that's in a nutshell. So as technology is moving and as a customer is moving to the next level, they are becoming hyper positive, right? Every customer has its own nature. Like take example, in 2017, we have 7 different generations. And every generation has its own demand. You talk about my father or my son, or every generation, like somebody is educated, somebody just started his job, or somebody is into kind of 30s. So every customer has its own way to look at his banking services. So I think as a bank, I can do so many things for them. But while these new players are coming in, that collaboration is is making things easy. That is how I look at it. I'm not really looking at how banks were behaving earlier, or banks will behave in the past or in the future, or how fintechs is taking care of these new kind of services. What I will look at is like everybody is trying to understand now the customer behavior. Customer wants a kind of a personalization, or customer will require kind of a hyper personalization in future. Like if I'm standing here, I want all the services right here. And I think technology is a driving factor all this. If by sitting in somebody sitting in a branch, how can I create a hyper-personalization kind of experience? Somebody is moving around in the peninsula, or somebody is moving into a nearby mall. So I think technology is a driving factor. Now, coming back to the blockchain aspect, blockchain is you have to understand what is that blockchain all about. So blockchain is a kind of, today, blockchain is a kind of a second internet. Just imagine the internet when it's become open in 95 and followed by, there were some of the use cases like a browser. That is why we see today Flipkarts or Paytms. Otherwise, you would not see something kind of that kind of a business model. Similarly, blockchain today is somewhere into like 82s where we have that kind of an operating system called MS-DOS, which have gone through the various kind of standardization and various improvement. That is why it has become Windows, and people are leveraging upon that kind of services. In 82 also, people were very happy with the MS-DOS. And they were very happy that this kind of a superb operating system has come. So blockchain today has a lot to do on that front. So in a banking side, blockchain, how I can leverage is that, take example in payment system wherein I send money from one mobile phone to another mobile phone, peer-to-peer, for example. In between, I have various entities. You talk about sending banking server, another trusted agency called Visa or NPCI, followed by the receiver server. So many servers, then within that server, there are 3-tier architecture like application server, database servers. Isn't it that beautiful that all of these servers I convert into a single node? And this node is responsible enough for the processing as well as settlement, the reconciliation, for which I do a lot of many things in current payment systems. That's the blockchain all about. So blockchain gives them that liberty to really minimize the cost around your operational processes and processing of that payment use case. Take example, Bitcoin is one of the use cases of a blockchain. On similar ground, I can really come out with various other use cases where I need trust factor between 2 or 3 agencies, trade finance, supply chain, or tomorrow I want to do a land registration, which is one of the basic problem in front of India. I can really build on kind of a very good engine on blockchain. Or a centralized KYC, which we have implemented now, I could have really built it on a blockchain plus Aadhaar. As I would look at CKYC 2.0 in the combination of Aadhaar and the blockchain itself. So blockchain, we are adding, as a bank, DCB Bank, along with a few other, there are 30 members, we have started a bank chain kind of a forum. We are experimenting it since February. And happy to say that almost 6 use cases are ready to go beta live. So that's the journey. Although we'll say there is standardization happening, many more fabrics are coming in from IBM Hyperledger, or you talk about multi-chain is there, or Ether is there. But it's a good journey, and more than 20 governments are putting money into that. Dubai is one of the use case. They are saying that with the help of blockchain, they will bring out many more jobs, and Dubai will be one of the happiest place to live in. So we understand that as a bank, and very good to say that as for any technology, it has a phases, right? Like awareness phase, experimentation, POCs, and go into the implementation, and then actual with the implementation of government. I would say we are happy we are reached to that experimentation stage. Aware people are aware. This is the use case. Finally, you talk about many new technologies which are coming in, right? So I think it's really, you must have heard about omni-channel, wherein earlier we used to have a branch banking as a primary channel, followed by ATM has become another channel, as a robot it has come, right? Then with rise of internet, we got internet banking, followed by the now mobility. And all of a sudden, you will see in 2-3 years, all these devices will talk each other for the payment experience. Connected cars, or refrigerator ordering something when it is empty with some of the vegetables. So that kind of automatic experience will come in the future, and banking will be those core banking or banking will be in the back end. Leveraging of this banking service to the external world so that more and more customer get benefited out of it, all these interfaces like Book My Show or any other apps, that is possible through these APIs or aggregation business, wherein banks are happily exposing their APIs. Have you ever seen some fintech is exposing their APIs for something, for all the banking? No. That is why this relation between fintech and banking is really required, so that fintech, with the help of their energy, the UI UX experience, kind of their ideation, so that it reach out to the mass customer. Take example, we have yet to reach mass customer. Whatever we reach, all these mobile banking customers, we have to reach the last mile wherein there is no electricity or there is no, at times, internet. We are covered with almost 30% of internet, even if Geo is there in India. So there is a long way to go, although we are coming with smart, cheaper smartphones or phones, or Geo factor will be another form factor after Android and iOS. People like bank are going forward for defining their mobile banking solutions for those also, because we will see mass adoption of Geo. Right. And coming back to the last question, which you had talked about AI, ML, or big data, I think bank is really sitting on a big and huge data. Almost all the customers who has a bank account, almost we say under Jandan, we are around 67 crore, or maybe more than that, linked with the Aadhaar. And Aadhaar coming into the picture, then really working out some kind of analytics, or that is how many banks have started their journey. We also started our journey to bring on that kind of a business model on a predictive kind of this business model to do with the big data. AI, ML, we are using it into fraud risk. Our fraud risk creates a customer profiling for every customer, and we keep on learning that pattern of the behavior. You talk about IoT and another radical change agent. We will see every home will have home assistant, the way we have television today. And just imagine 3 or 10 years before I ask, your cable is not there. You will feel like very uncomfortable, right? So today data is something like that. I'll ask, let's cut down your data for 1 day. And that too, for all those services, we are really taking those services. So home assistance is going to be one of the integral part of your home, which will control all your devices, which will control all your internal needs in a smart home. Similarly, smart offices will be the whole future. And bringing on that banking experience, like I am sitting in here asking that assistant, please book something for me from here onwards. So that everything we are understanding as a bank. And with the help of these fintechs, we are experimenting that and looking at this kind of more and more services reach out to the customer. So in a nutshell, technology is the driving factor for all kind of a service, not only banking, which really helps to bring on different kind of a very good experience to the customers.
Got it.
And so we are not exception. We are also
So interesting. So I think there's at least one person in the panel who's a little more optimistic about the newer technologies and the impact it can have on customers.
No, answer is that just imagine your life without these technologies.
Yep.
So that's the answer.
Yep. So Vaibhav, let me come to you. Yours is also an interesting business model, and you have focused mainly on the SMEs as FT Cash. So this is a segment which until now probably was not so well served by the banks. Maybe some NBFCs did focus on that. So what are your thoughts on how you are going to serve this segment and the role that technology plays in this?
Sure. So when we started, right, one of the things that we researched in the market was that most of these merchants that we spoke to only had a feature phone and a bank account to begin with. And that was a big challenge at that time because you had to prepare products and solutions which actually worked only on SMS technology or sort of IVRS. So that's why initially our payment system that we had created was in a way that the merchant could sign up with us using digital KYC, but eventually every time a payment actually happens to him, he'd get an SMS confirmation because there's no other way to actually give him a confirmation otherwise because there was no data available. But obviously over the years, like in the last 2.5 years that we've been around, we've seen that that has significantly changed. Now, at least the merchants that we work with, and obviously we have not reached the scale to reach the last mile customers, but we're still in the first tier 1, tier 2, tier 3 cities. And most of the merchants do have a smartphone. They do have, I would say, like internet connection enabled now, and it's increasing over a period of time. So what used to be the scenario earlier is not the case anymore. They actually have a mobile application when they check their daily transactions that they've done on our platform as well. And as that has progressed, right? So initially when we started, we only had, say, payments, credit cards, debit cards, wallets on our platform. But then we integrated net banking, and then we integrated UPI, and now we have Bharat QR. All sorts of payment methods which have now come into the foray in India. And that has really changed the setting for us because we're seeing that merchants are demanding more and more of these because at some point, like there is some customer who does come with that, okay, do you have a UPI that I want to make a payment with? So while this is still on a rise, it is going to happen. What was the most important part was that a lot of the demand that was coming for digital payments for these merchants was actually from their customers, right? Because it was solving the problem of the customers itself. It wasn't really solving the problem of the merchant. Then we sort of actually researched a little more and we realized that the real need for a merchant was actually getting loans, getting credit. And that is why we felt that if we are able to create a hook for payments and loans together, we actually have a much better proposition for these merchants than any other way that we can begin. And that's why we started doing cash flow based lending for these merchants. And we saw that that actually created a bigger hook for these guys. Because once the loans came into picture, right, they were able to see their businesses increased in terms of value. They were able to get credit at the tap of a button, which was much faster for them. The cost effectiveness was much there. So we actually saw that there were 3 problems that they were primarily facing. One of them, this was all without technology. That one was that the acquiring and the servicing of these merchants was very expensive. At the same time, there was not enough data or risk models to assess these merchants in terms of the eligibility itself. And the third was that they didn't have any kind of, the traditional lending products that were defined by the banks actually didn't work for these guys. So what in turn we did was to eventually solve that problem. One, because these merchants were on our payments platform, it helped us loop that into it. So the acquiring that became cheaper. Because of the algorithms that you use, the data that you use, the digital KYC that you use, it make it very simple and cheaper to actually give loans to these guys as well because the default rates are lower. And lastly, we started recollecting these loans also from our payments method itself. So eventually, when these merchants were using it, we were able to take a part of it and distribute it onto payments for the loan recollection. Now, this is a journey that I would have not been able to imagine 3 years back because the merchants were also not tech savvy. They didn't know how these processes work. So I think that evolution also has gone through over a period of time, and merchants are also learning that these are ways in which they can be now catered to, which probably they had not even asked for before.
Again, so it's interesting. I think what we hear, at least from 3 people in the panel who are into lending, is starting with very simple things, using India Stack for identity, authentication, knowing the customer, and maybe use very simple rules to do the underwriting based on just the cash flows of the merchants. How do you see this evolve in the next couple of years and the level of sophistication going up?
So from an evolution perspective, I think, let me start by saying there is still enough from a regulatory perspective, and this I'm talking from purely from a lending standpoint, and we are more an intermediary than a balance sheet player, that the kind of support we can get. And this is more on the cost of capital for us. So there is a regulatory support that will be helpful for fintech players, I would believe, where the small ticket loans, there is a way in which you can finance them easier than today. That's a non-tech part. On the technology part, I would believe the robotics will start to play a more important role. And when I say robotics, it's about how do I underwrite without having a person at all there, right? There are still enough of exceptions that come into play. There is still some amount of paper involved, whether it's the collection of repayment mandates and things like that. And can some of it, using technology and robotics, can I cut away? So there's still, I would say, enough of a layer in the next 2 years from a robotics standpoint that can really, a machine can sit. And really the layer I have on top, the people layer, is more on the forensic analysis side and on the audit side, and let the machine do it. I think that part of the evolution needs to happen. I would say the second part of evolution, I don't know, I don't have a good answer to it, is lending has two parts, right? There's everything to do with giving the money, and there's everything to do with collecting the money back. And so from a collection standpoint, can I use analytics to actually find a way to recover the money also? And I think we are doing some form of early warning analysis, doing some, you can again call it basic demographic analytics, right? Cluster analytics to do, hey, can I create risk pools and find a different engagement model with different set of customers so that I'm able to make it easier for me to recover in case some of the loans go bad. So I think that part of technology which helps in collection is still an evolving theme, and will need to be, again, in the context of small ticket consumer lending, because one loan in 10 going bad just creates the NPA ratio, the ratio becomes significantly higher, becomes a very important element that at least we are trying to tackle with.
So, I would just like to add, I see technology as something which companies will, banks, financial institutions, startups and all will continue to use and evolve more and more in ultimately solving the problem that they are trying to solve. So I don't want to see as, are you guys using blockchain? Are you guys using ML, IoT? When you're solving a problem, there will be a solution for it which requires some form of a technology, and that needs to be picked up at that point in time. The way I see technology is that technology should be part of the DNA of the company. And a lot of the fintech players, like young companies like ours, start out with that DNA because we don't have anything else to compete on, right? So when we start out with that DNA, and hopefully when some of us will become bigger and that technology DNA continues to be there, you will start seeing a lot of usage of new age, so-called new age technology getting into the system itself. And hopefully, just as an example, blockchain should be used for even civil records, right? Somebody reports that this particular transaction happened, it should be just told to everyone. Will that happen in civil? It may take years. If we were to build it and we think that blockchain is a good way of putting in records of every transaction that has gone through the system, we could do it. But it has to solve a problem. We should not look at technology as this is being used and so should be used in every aspect of financial services.
So I'll just add one last point to it. So I think in terms of where you're saying about the 2 years going forward, right? So when we started, I think 3 years back, we could see that there was a lot of active conversation about how fintech players are going to threaten the banks and dethrone them. And I think you said that if banks are not a part of the competitive analysis, or you'd keep the banks as a part of, not as a part of your competitive analysis. But I think going forward, what we're seeing is that is changing a lot. There's a lot of collaboration happening between banks and fintech companies. And that eventually will lead to a model wherein the fintech players will be able to provide a lot of innovative products because they have the agility to do so. But at the same time, banks will be able to provide the distribution channel, because if you already have the distribution channel, right, there is no need to recreate the distribution channels over and over again, because otherwise it becomes much more of a distribution play than an innovation game. And I see that with a lot of fintechs today, that each of them are trying to capture the same low-hanging fruits in the market, because that's the way they can show scale, that's the way they can show some amount of credibility that, okay, we've done this much. But at the same time, if there is a collaboration that actually happens from the banks to begin with, and we're able to run smaller pilots and quickly able to do that, it's much easier for us to be able to scale that and show pilots working and then products being worked out with banks as well. So I think that is one place. In last case, I think, apart from this, one area that not has been spoken a lot, especially in the banking space, is artificial intelligence. I think there is so much of data that is available in the space, right? And artificial intelligence can actually play a big part. I know it's a very cliched word these days, but at the same time, like, it's just one of those things that has a lot of potential to be able to predict a lot of the trends that we could see, either in wealth management, either in terms of from the financial products, that services that we want to give out to, especially for people who did not have any amount of data before, but the alternate data now can provide a lot more channels to be able to provide these. And you are working with with a payments bank right now. That data is actually going to be used, like the one that you have from all of your sources, right, will be used to be able to give that. And the richer the data gets, the more it will be able to give like better financial services and experiences to the customers as well.
Shall I add one thing? If you look at a fintech or the way we are moving, who is the biggest startup in India, right? Who is the biggest startup? If I ask our audience, I'll certainly get many more answers like Flipkart and Paytms or maybe many more. But if you look at the biggest startup in India, the way we are driving is the government of India. Whatever they have declared in 2013 as a RBI's vision statement, along with a UPI delivery or a BBPS delivery, or a Jandan delivery, or RuPay card delivery, or bringing on the Aadhaar into mainstream, everything they have delivered. If you look at a holistic view of an innovation index of India, has increased, I would say, starting from 65 in 2015, which is now almost 45. If you look at the whole population of world, we are almost number 2. But our innovation index is 45. We are number 45. Whatever you talk about fintechs or whatever innovations we do, we have a long way to go. That is why this synergy, collaboration is really required to bringing out real innovations, real fintech innovations. What is happening at the fintech? If somebody is doing payment experience, everybody starts that. 60% of startup fintechs around payments, but that too again, the payment on a mobility, not actual where the payment is really required as in a community in a smart village or villages, something like that. All of a sudden, we started bringing on a lot of fintechs into lending. Nowadays, P2P lending, right? The regulation has come, and all of a sudden, there is a rise of P2P lending. So, as rightly said by all the members, see, having an institution as a bank or a fintech is okay, but what is the stability and the scalability of that? Banks, just go in a bank and just see how the bank runs. Whatever profit you get, 25% goes as it is. Remaining part, 75%, whatever it is, the bank runs as an OPEX, CAPEX, and rest of the things. Can fintechs operate that way? Cannot. It's a very tough business to work as a bank, because bank has an ecosystem supported by the other banks. So that is what is a different game altogether. So let's never talk about this is a threatening game or something like that. What we should talk about as an India, like how can we really improve on our innovation index so that various use cases we talk about payments and all, what is that all about, right? We have to really lift the lifestyle of the human being in India, right? So that is what use cases has to come. So let you talk about AI or ML, these are all the radical change agents. I would name, there are 5 radical change agents in the coming era. You talk about IoT, you talk about big data, leveraging on the data to do the better customer services. You talk about the blockchain, AI, or cloud computing. And bottom line, cyber security. Whosoever is leveraging on these aspects as a standard, because we don't have a fintech standard in India. If I ask any fintechs to come and do the experimentation in an open forum, he has to struggle. He will go to the bank A, bank B, bank C, and everywhere is the same thread, right? As you say, do the experimentation, fail fast, success fast. As in a platform, we are lacking that kind of a sandbox kind of a stuff. So wherein is the responsibility of the government of India, the way Singapore has done, they have built in a very nice sandbox. People go there, openly do the experimentation, success fast, fail fast. That is why their innovation is high. So these are the problem statement we should concentrate upon rather than bank versus fintechs and so on. That's what I wanted to
So yeah, I agree with a lot of what you've said, especially government, regulators, quasi-regulators playing an important role in increasing our ability to do a lot of things that we are doing. Even if you take flow-based lending as an example, I think very soon there will be architectures which will make it even more powerful while you are currently relying on the merchant data. Probably structurally a lot of flow-based information will start coming, which can be a basis of lending. Ashutosh, you've heard the other panel members. You as an investor, what are some of the things that appeal to your ears and you think are really going to be the future and you would put your money on?
Technically all of these ideas and stuff which gets implemented, right from process optimization to reduce cost of business, interesting. This is like, when we look at companies now, we assume this has to be there. You need to have capability within the team who can sort of build out models, the fundamentals of computer science, AI and others. We always continue to worry about the market size and opportunity. As investors, we are always looking at something which can be potentially large. So by thumb rule, credit seems to be like something which is going to be a large business opportunity. But we also sort of pull it out that if you have to build out a large credit business and if you start doing your spreadsheet models around there and start putting consumer acquisition cost, etc., and all of those things. Just highlighting something which we saw on the P2P side, and we are trying to do a deep dive and understand what kind of customers are coming your way. The primary use case was these guys were credit card defaulters, right? Now these folks are trying to fix their CIBIL scores. Somewhere, the P2P guy was helping him fix it. And he's going to graduate and go back to the bank and start taking money from him, right? So you're in a continuous acquiring and churning mode around there. These are things which we worry for. So all points on tech, absolutely. We have some terrific stuff happening. We see a lot of good companies which are trying to marry some fantastic ideas in terms of IoT plus insurance opportunities. All of these things being done. One place where they struggle is getting access to right data sets today. They need partnerships for that. That's where they try to become a tech-enabled SDK or an API layer and start plugging in with banks and other partners and other things. But the question as investors is, what's next after this? For how long will you be the point where consumers are going to turn up or you're going to be a service provider? So increasingly, we feel that if you just look back at the current infrastructure, it's good to be a process automation guy. And we are a little more bullish on them today because they're fixing something which is fundamental. It's like unlocking efficiency. We seem to be liking those guys more at this point of time. Maybe 6 months down the line, if you ask me, some things will change because things are changing very rapidly today. But some of these stuff, going back to the basics, large scale opportunity, can you create something like that? Even from SME lending, we always ask this question, for how long is this guy to take exorbitant loans from you before he fixes it and moves on, right? And that's a question. And unfortunately, we are still not reached that stage where people have started churning out. We'll have that shortly, where your consumers will leave and go. How do we sort of preempt those things? Because we are in for like 3 years, 5 years, we have a long-term horizon, and we would want to have that view. Right.
Yeah. So I think one space which has probably done very well, and we may debate whether the business model is great, not great, workable, not workable, but at least it has made a lot of customers come in and use is wallets. Like you also mentioned that a lot of innovation has happened in the space. Wallets and now probably UPI. Are there any learnings that one can take from what the wallet companies have done or the UPI companies have done?
I think wallet companies have taught most of the Indians to use mobile and doing those transactions on the mobile. If you see the penetration of these wallets compared to the penetration of mobile banking app of a bank. So I would say wallet has really surpassed on winning notes before demonetization. Post demonetization, I think most of the banks have understood that that's the only business to bring on most of the services on the mobile. And many banks have started their journey to create their own wallet. Like Pockets was there, now it has come to the very good way. Or even if you have seen, the SDFCs has a very good, nice wallet. And through this UPI coming into the picture, most of the banks has their own UPI kind of app. And Beam coming to the picture has really disrupted all those UPI apps.
So my question really was, can some of these learnings be extended to other parts of fintech? Because that's probably an area which has stood out in innovation. So are there things we can take from there and apply it in other parts of
Okay, so
financial
what
services.
wallet has brought in, ease of payments, engagement models. So as a bank, I can really say today that I'm opening your account in 30 minutes or 4 minutes. But what wallet has given that kind of an opportunity to come again and again, right? How can my customer becomes a primary customer? That is how is the learning from those wallets, so that you can bring on those kind of a service as well as the engagement models, leveraging on this AI, like giving a predictive notification to him that after 7 days there is an EMI coming in. Would you really like to do this transaction right now? Or do you want to wait after some time? So I think this kind of experience we have seen into the wallets. And this kind of a greater UI, UX has come into these banking apps also now.
My view on wallets is a lot more negative. I think they came into existence because doing a transaction otherwise in India with two-factor authentication and all was much more difficult. With wallet, it became easy because you could just, just pay. So as UPI and ability to just transact with your bank account becomes easier, there is no need for a wallet, right? So, and plus, because of investors, I was also an investor earlier, so the euphoria around this and the money which got into the segment allowed for them to grow bigger and bigger with offers and other things. And right now they're sitting on a large customer base. So that is the asset that they have right now, right? If I were a large wallet, I would be quickly trying to figure out how to move away from this wallet ecosystem and monetize the customers that I have. And that's the real opportunity that sits out there. And you have now a lot of other payment platforms with PhonePe and Google Pay and WhatsApp will, looking at China, how WeChat has gotten into payments. I think WhatsApp has a tremendous potential for creating a payments platform. And that's the journey. If you see even over there, payments led to lending, and that transition will also happen in India as well. How long will it take? Because at the end of it, transactions need to happen offline. That's where most of the transactions are. So merchants need to be onboarded. I think India Stack again will play an important role over there. You need a Visa kind of a network on, how do you get merchants to get paid, get settled in an open payments platform. So that is where I see things going.
Yeah, the only thing I will add is, I think there have been good wallet players and bad wallet players defined purely by customer experience, right? I think what we don't realize is lending particularly is a very involved and digital lending is an unassisted model. So there's a lot of learning. I mean, people don't think, again, this is very conventional, right? Non-tech, which is what is consumer experience. Consumer could be a small business merchant or it could be an individual, right? So I think that the best wallet players have aced the art of making it simple and intuitive for the customer, and to a mobile form factor, to a tablet form factor, web form factor. I think that is one learning at least we try to do. We have a lot of emphasis on UI, UX. It's nothing to do with ML, nothing to do with even simple analytics, but just the interacting model with them has to be very, very well thought through. And at least we take a lot of learning from Tez, right? I mean, there's so much learning we draw from Tez, the way they've implemented it.
Yeah, so, wallets, we had one more deeper thought. Wallets' predominant transactions were top-ups, telephone recharges, right? There used to be one phone in the household which used to be used for all sort of recharges around. That's where things started. Then all of us had this great hope that we will, in person, we do a lot of social transactions, right? P2P happens. We all hope that it will happen. If you pick up any wallet player and start looking deep data and real data around it, the P2P transaction was very, very small. The component of social payments, all of this. And like rightly Sachin pointed out, once you have reached a certain traction, you have to move on from there. That's the most important part we have realized with any consumer business, because these guys are onto in some sort of loop, right? You're running them into larger circles and then throwing different traps around there and converting. Recharges were the primary reason the wallets came up. There were a lot of things which were inefficient, because within a household, I used to have like 4 different SIM cards, 3 different operators. I can't be going across topping up, and that is where everything picked up. Then, fortunately, things like 2FA came in, which was a problem. And then people had Uber moments. Everybody had their Uber moment around there. And a lot of people kept sort of coining this word, every company needs to have an Uber moment. And that's what actually happened with some... Right? Demo moment, yes. So that's if you do not bring the second hook into play, that's where things lose out and you have to move on. And that's where we are seeing what the wallet is happening. Because the first part of the problem is resolved now. Payment and recharges are no more a problem today. Recharges are easy. They're getting done very easily. So the wallets really have a question of the primary use case in doubt.
So what I hear are things like improving the customer experience is probably critical. Learn from that, monetize the data, move on to the next thing, don't rely on the same thing.
Perhaps one thing to add is the faith of using digital payments. I think that was a great way where wallets actually brought in a lot of faith into the system.
The thing that we would have learned the most is about customer loyalty itself.
Right.
That whether customers are ever loyal to a particular piece itself or not. Because one example that we saw very early on was that there was, say, one ice cream shop that used to offer an offer. You had an offer by a wallet, and there were multiple transactions happening at the time. The moment the offer went off, like the transactions, the guy stopped accepting the wallet itself.
Don't burn money is the next learning.
Yeah, like so I think that was a big learning, right? Like what is the hook that you're creating with those customers so that you can actually keep them actually engaged with you for a long time. And I think that is one learning that a lot of companies had over a period of time now.
So I wouldn't say that you don't burn money should be the way to go, because you should have a clear vision where you're going.
Yep.
Right? Because if you don't burn money and you have only 10 customers, you'll never be able to do anything with those 10 customers.
Right. So before we open it up for questions, one quick round where I'll request your summary on what are a few things you would request the audience to keep their eyes on and watch out for. And if you want to stick out your neck and say, you know, this is a cool tech, don't waste your time and money on this yet.
I'll just start. One segment which I am pretty excited about, and if I wasn't doing what I'm doing, then I would have been doing that, would be around fraud models and security. With so much happening digitally, there is bound to be activity which is going to happen, which is going to be fraudulent.
Yeah, I think something which we didn't cover during the panel, I am quite bullish on the idea of how savings and micro savings are going to pick up in this country thanks to the infrastructure which is getting built out.
So for me, I've seen a lot of use cases, futuristic use cases of artificial intelligence in the financial industry recently. So for me, I think that's one area which I feel has a great potential for providing better financial services.
So what I want to say in a nutshell, take care of 5 things. Take care of your people, reskilling of those people, bring on new skills, new roles which are relevant to the your processes. Adapt the technology like blockchain, AI, ML, IoT, which is relevant today and tomorrow. It could be anything else. Tomorrow it could be quantum computing, be relevant to the technology space. Look at the regulatories. It could be the RBI or any other regulatory based upon your industry. Keep eye on them. Look at the fintechs, how they are really operating, alive with them. And finally, do the best for your internal customer and the external customers.
I would say cyber security, without a doubt. The second thing I will say is some form of have a look out on the privacy bill, which is still under consideration, what impact it could have on the consumer front.
Great. I'll just add my 2 bits also. A couple of areas that at least we as Aditya Payments Bank find very exciting is the prospect of something like an UPI. And just like wallets, probably it's going to be a large-scale game and with a lot of transactions. So what we believe we need to watch out for is how do we use these transactions to understand customers much better and monetize that data. The second thing that we find very interesting is how do we solve the distribution challenge. So currently, the banking penetration is extremely low. With the India stack and with the reach, can we solve that problem using technology? Great. Thanks so much.